Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, April 10th, 2015. As a disclaimer, before you watch this video, you should know I am recording it on Friday afternoon around 3:30 p.m. So there may be some discrepancy between what you see in the prices on your charts if you're viewing the video over the weekend and where prices are right now. Let's kick it off with the S&Ps. I am slightly confused here as to what the next move is going to be. I do think it is going to be bullish. I was saying on the Tasty Trade show earlier today that there's a couple different ways you can look at this. One thing that I'm focusing on here is that we have broken trend to the upside, and since then it's been a look above and fail, and yet there's been no real protracted move downward whatsoever. There's the action here could easily be thought of more as just a balancing area, and that's why I want to denote that with a square. Basically, you should denote balance areas with squares on your chart. And if it is indeed a balance area, then that would tell me that the market actually wants to push a bit higher to the next resistance point up here. I'm not sure of that, but as such, I want to talk a little bit more later in the video how you have to be really selective with stocks. There's not that much really out there. I don't think right now it's going to be geared very much towards what's going to be running ahead of earnings over the next couple of weeks. I think those are going to be some of your best bets. Is take a look at when those jumbotrons are going to report. They're probably going to be bullish into that, and those will probably be the strongest bets, as opposed to just thinking that the market is going to go up here and take any bets. Because if this consolidation continues here, and we build more balance, and maybe it goes like this, I don't know. I still think there's going to be money to be made on the long side of some of the jumbotron stocks that are going to be holding up into their earnings reports. So we'll see. The confidence in this market, especially since we're inside of this balance area, remains extremely low. One of the ways that you can tell low confidence is when you have value all over the place. So this is a balance area here where we have value, right? We know that this here isn't worth very much. This is just a spike low. It then gets repaired by all this move here, and here you have pretty much another area of balance where price doesn't really go much of anywhere, and more importantly, the value area shifts and overlaps constantly. And in this case, it's interesting because it didn't even overlap, right? You have value here, and then the next day all here above, and then the next day back down here, and then in the next day back up here, right? So it's really just chop, chop, chop. So again, this is why I'm saying is that your focus here has to be, if you're more on individual stocks, then definitely on trying to figure out where the broad market is going, because we are in this relatively large balancing area. In looking at the profile, I did also want to point out is one of the things I'm seeing is there's continued moves where the point of control kind of moves around in all different places. So you have fairest price to do business here, then here, just kind of all over the place. And you don't see it as much in the developing profile, and I say developing because this is being recorded at 3:30 p.m. Eastern on Friday. But those of you that have been following our stuff during the course of the week, and you listen to me and Brad on Tasty Trade, you know that there's been continued structure in terms of how the futures are trading, where, for instance, they have late day sell-offs that don't hold. Like this is just a classic thing here. We had two of them actually this week that were interesting. The first one was here, which was Tuesday, where you had a classic 45-degree line, right? 45-degree line, of course, is like this. What happens then is futures traders get themselves overly short. They're pressing lower. As you can see, less and less time is spent continually at each level. Finally, the futures make a spike low at the low of towards the end of the day. You know that's towards the end because it's the letter N, right? The N period is there, right? And you know if it's happening in the end period, it's very late in the day, obviously, when you're looking at the fully closed profile. And what happens, the market actually closes much higher, and then the next morning you open up relatively equal and do nothing but go up, right? And this is just a classic example of how this market is continually overdone to either direction. That's all it does. And in this case, after people got themselves too short on the 45-degree line, the market zooms up here, and interestingly enough, where does it close? At the high of the day on a poor high, right? Notice that you have two TPOs across. And what is that? Well, that's the opposite of this, where here they're overly short into the close, Here they're overly long into the close. They didn't get access to the upside. The auction didn't complete. Everybody's just kind of trapped right in here. And lo and behold, what happens the next day? The market opens all the way down here and continues lower during the course of the session. So just these 2 days should illustrate to you very, very clearly how exactly what Brad and I have been saying over and over on the Tasty Trade Show in terms of inventory just kind of switching and passing back and forth between short-term traders. That's exactly what's happening. They get too short, they get too long, then they get too short again. It's the same exact thing. Remember that the other time frame, the ones that are more in control of the market, the ones that have the longer time frame outlook that are going to get in it and stay in it, they don't operate this way, and more importantly, they don't operate late in the day. And this has been a market that has had moves late in the day. We've been seeing that. All right. So going back to the broad market chart, and again, as I was saying, are we going to assume that this may just be a large bear flag? I think there could be opportunities in individual stocks, as I was saying earlier, in terms of before earnings. Now, one of the ones that I'm most interested in, and as you know, I was long it earlier this week, and then ended up getting out break even as the stock kind of tanked, is Amazon. And my focus here is on the fact that it is broken out of this bullish pattern, which is here. You can see how there's this clear like ceiling here, right? So you have this ascending triangle, basically where you have the tops flat and there's a ascending line that can be drawn. And when it broke out, it hasn't rallied too far out of there, but it's just gone sideways and held this. And as I watch it a lot during the course of the day, I'm noticing that there's a lot of relative strength here between it and the market. Like for instance, if you look at, this is just a really simple trick that I do. I wonder if I can remove that box. There we go. Simple trick that I do a lot of times is I'll just see like, where is the stock trading in relation to the S&Ps, right? So notice that this is Friday, and again, it's still trading. As I said, I'm recording the video early. We're here in the middle of the range, right? And yet at the exact same time, okay, so you can see here how we're much closer to the lows of the day. Like right now, ES is at 2035.50, and I don't know why this is not showing properly. Oh, there we go. There we go. All right, so I guess if for some reason it scoots it over. So here's ES, and notice that it's where in relation to its range. If this is the range of today's RTH session, where are the futures trading? Down at the low of the day. And again, think about what I say very often about the inventory position of the short-term players and how they act. Remember, the longer-term traders, they don't sell a market late in the afternoon. That's one of the most important things I've learned from James Dalton. And again, kudos to everybody who's doing the intensive. The response has been amazing. Jim, thanks you. You guys have been great. Everybody's loving it. I've gotten so many emails back saying, thank you so much for recommending this and giving a discount and all that. You guys are loving it, which is great. One of the things that Jim always says is, you know, the bigger traders, they're not going to wait till the afternoon to sell a market. And that these late afternoon sell-offs that often happen away from value, they're generally suspect. These are the ones that usually result in a gap up the next day because these people are just doing it at the wrong time. Today is a Friday where options are expiring. That could have something to do with it. But again, you have your futures market selling off down here to the low of the day, and where's Amazon? On the same 15-minute chart, it's in the middle of its range. It's all the way up here, right? Well up in the middle of the range. So I find that interesting. That's the type of thing I look for. But in the bigger picture, really what I'm seeing, if we just keep it to like an hourly, is you just have this enormous consolidation that's happening here. And I think what it's doing is it's consolidating ahead of its earnings. Whereupon I think there will be a relatively large gap, if the market doesn't fall apart between now and then. The daily charts here are going to show you that Amazon is reporting on April 21st. This is actually not correct, however, because I've checked a number of websites. More often than not, they say April 28th. And even more important than that, the options market is really knows when it's reporting, because notice here that 14 days out, right, you've got this implied volatility, and here you've got this implied volatility, which is 21 days out by the end of the month. There's a huge difference here. So that's the reason why these are at 52.3% implied vol, and these are only 33, because the report is actually happening here, not what the chart is telling us. So that being the case, what is the play? Well, I think that if you look deeper into this, so if we look deeper into this chain, we can see that the calls way out of the money are pretty pumped up. Like something's up here, because you've got 700 calls that are $107 out of the money for this, that are still trading at really big amounts. I mean, $1.40 by 260. The fact that they're bid by this much is amazing to me. So I think something is up, meaning that I think, you know, it's kind of implying to me that the gap is going to be up, and the gap could be relatively large. And also, just by nature of the fact that these calls have any value, that tells you that the earnings are definitely happening on the 28th and not on the 21st. So anyway, that being said, I've started to leg into, I shouldn't say leg, because leg implies pieces of this, but starting to collect condors for this expiry. And the reason I like condor is because what I feel that it's doing here is it's leveraging some of this premium that is so expensive. So notice that I'm long a 600, 640 call vertical, which expires after the earnings. This is at the end of the month. So there's a possible $40 to be made here. That's a lot. And you can see down here that this is trading right now for $13. And that $13 is inclusive of the discount that I'm getting for selling this for about $2 here, right? You see this? That I'm getting, maybe not $2, a little less, but I'm selling the 680, 700. And my thought process is, so the maximum that this thing could make is $20 if price is all the way out here over 700. But you can see it's pricing in more of a move of $60. So I'm thinking I'm going to be somewhere in between here, and I'm willing to pay $13 for that. And I will probably be buying more of these as the chart develops more. Worst case scenario, I just stay with what I have, but I'd like to build the position more and have more of these and then play it like right into the gap. One of the questions you're probably asking yourself is, yes, there is a possible payoff of 40 here, but you have a cost of 13. That is correct. However, I also have 2 full weeks. This is a longer expiry cycle. I have 2 full weeks of time, right? I have this DT7 and this DT14 where I can sell puts against it. Correct. I can also, what I was thinking is I could get myself into, let's say we have a breakout here. I know where the resistance is. I know that we've been very strong in terms of bumping our head up at the 603. It's happened a couple of times. One of the things I was thinking of is I could even do a covered call on some shares here, right? I could maybe buy a deeper in the money put and sell a put just for credit, right? Not necessarily to make money, because that obviously will negate itself, the short calls in the stock or the short calls and a long call, but just to pull in credit to kind of nip away at that. So that's one idea. Another idea, what I'll probably do is assume that because the stock is reporting, and again, this is all if the market doesn't completely fall apart, which I don't think it's going to. I think the bias is going to remain sideways to up for what it's worth. If that's the case, then probably ahead of their numbers coming out, I'm going to assume that the trend line will not be violated. That, again, it's a simple case of similar to the broad market, where if the stock was going to come down hard, it already should have. And you can see here that it's acting actually pretty technically, where you have prior highs, here's the breakout point, and then when it sells off, it comes down to the breakout point and bounces. And all that's really doing is just creating a relatively large horizontal sort of channel here, correct? Which is about, I believe, like $20 wide, right? You're looking at about 585 to 603, so just under $20 wide, right? Now, if the stock breaks out on its own, that's wonderful. We would expect that the range would be doubled, and it would do about the same $20 to the upside. So it'll go like 600 to 620. That would be wonderful if that happens ahead of earnings, because then I think it's pretty sure that it's going to gap up even higher. Usually that's what happens, is they're buying it up into earnings. The pattern is already bullish. You have a lot of people that are very comfortable up at these levels already at 640. They're not going to be selling into it. So that's what I'm thinking. But of course, this play is for something bigger than that. As I've explained, this is a play where you're risking 13 to make 40 at the outset, at least. for the stock to pop on earnings and end up somewhere here in between 640 and 680. I don't believe it's going to go all the way up to 700 and gap to new highs, but we'll see. All right, and remember the key is also is what options can be sold against that 13 debit to lessen that, so that by the time we come up to the earnings date, and there's plenty of time for that, there's almost 3 weeks. We've got almost 3 full weeks. It's happening on April 28th. This is now being recorded on April 8th. Correct? You've got plenty of time to get that debit down. If I can get that debit down to say half, $6 or $7 through some put sales, all up in here underneath the trend line. And remember, I can be aggressive and sell more puts than I have calls long. I can do whatever I want to try to bring in those dollars. Then it's a really good play, because then you're sitting on an earnings play for really cheap, as opposed to what the risk reward could be. So that's the situation in Amazon. That's how I'm looking to play it into the earnings. All right. That's all I have for you today. Thank you for joining me. Again, apologies for recording a little bit early. Again, today this is being done on Friday afternoon at around 3:30 p.m. So there might be a slight discrepancy in your prices. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.